Stock market update, 27th of October. A lot of people are not going to be bloody happy, are they? Well, of course, I'd wish the markets would only go in one direction, upwards. But that's not the way it is. Continuing to look overvalued on a price earnings basis. In other words, how much you are paying in the share price compared to every dollar in profits the underlying company makes. And as you can see, insurance is cheap, energy is cheap. We'll have a look at some of the banks. I'll have to look at JP Morgan a little bit later on as well on this. Have a look at my Telegram and my LinkedIn for more. That's on alpeshpatel.com/links. When I analyze the stocks within this, I'm picking them not just based on their price charts, but a whole bunch of data going across about 10,000 stocks, okay, 10,000 companies, and a variety of information from their valuation to their revenue growth to their dividend yields, their cash flow, momentum, their statistical analysis, volatility, all sorts of things, okay? So where are we in terms of performance over the past week? It's looking pretty horrific, as you can see over there. What about other measures of momentum and valuation? Well, valuation is this: price earnings growth. We want that to be below 1, so the share price relative to earnings growth. Again, only energy seems to be cheap. Now, I did do on Telegram some analysis that I posted on ExxonMobil and on Berkshire Hathaway, and saying that they didn't really fill me with enough confidence for me to get in at the moment with the current market headwinds, and that's how I continue to feel about them. Speaking of headwinds, you can see now that the peak that we hit around July, where the Nasdaq was up 44%, well, that's well and truly gone. We're only up about 28% now, and you might say, well, thanks, Alpesh, that's not too bad, is it? The S&P up 7. If you're part of my Great Investments program, then you know you'll get the more detailed version of this and how we make sure we pocket our gain. And some of the ones who were Nasdaq heavy have had up to 100% gains in their pension. Those who are more S&P have ridden it and cherry picked and got to 30-40%. So what we need to do now is make sure as it falls back that you keep some of those. And for those who are new to the program, make sure that we're cherry picking new stocks. There'll be fewer of them given the market headwinds, but we only need 15 to 40 in our portfolio anyway. So where are we here on the S&P 500? We have a more than 10% drop from the high. That's what they will call, therefore, a correction. And that's where we are with it. We're in a downward channel, and that channel has been broken to the downside. Now, I'll tell you what my biggest concern and worry is. That should this monthly MACD, and you might say, you're looking at the MACD, not the way the textbooks look at it. You're looking at something which is so basic. Okay, well, I tell you what, for those of you who don't like that, just assume that I looked at some crystal ball and time machine. And what I can tell you with my crystal ball and time machine, or MACD, is this: if it does tend to drop below its own moving average, which is that, then the momentum will continue much lower and much faster, and therefore you'd end up somewhere like doing a repeat of that. So you could go lower there, and it looks worrying at the moment. All right, with that, it does look worrying. I don't think we're going to just get a quick rebound and that we've bottomed out by any means and then we just keep rising. Okay, I don't think that's going to happen. So it is a bit worrying, and we'll decide if, as we did last February, we go into cash. That was February here, where we said go into cash. And that happens rarely, because most of the time, this thing has been rising nicely. So it's very rare that we'd say, oh, look, we need to go into cash. But that's where we are at the moment. And if you are risk neutral, you would continue holding probably. And if you are risk averse, you would look to be selling some of your portfolio and going into cash already. So let's look at some of the specifics. Before we do that, just look at the FTSE 100, which I've been saying for a while is likely to track lower, and indeed looks that way. So put the UK to one side. Now let's go back here to some of the ones we've had for a while, like Apple. And again, the issue becomes buy, hold, or sell. Now, I've done a detailed piece about this on my LinkedIn, so have a look at that if you don't know where that is, alpeshpatel.com/links. So do you buy, sell, or hold? Well, I'm not looking to buy more at the moment, that's for sure. The question really becomes hold or sell. And I'm again going to be looking at, is that going to drop below? And if it does, then I'd be looking to sell. So whilst I don't trade my investments, and whilst this is for the long term, the issue then becomes, well, if it's for the long term, Alpesh, I'm just going to continue holding, and that's perfectly fine for you. If you're a bit more like me and a bit, yeah, okay, but I might just ease back on a position, then we'd be waiting for that to fall definitively below its signal line, which is its, as I said, the yellow moving average of the blue dotted line. And it's just a measure of momentum. And that hasn't happened yet. So we'll call this the Apple strategy of just holding. Okay, the analysts still remain positive. Alphabet, of course, fell off a bit of a cliff, took us all the way back like snakes and ladders, took us all the way back to what, May time virtually is where we are there with that. And it's still Apple's strategy for that. But if you're risk averse, you might sell some of this out. And as I've said on previous updates on YouTube and on Telegram, okay, the analysts are still positive, and you determine whether or not you sell based on your risk aversion and your holding period. So with this, still Apple's strategy, and it seems to be holding. I don't have some special insight into the future to be able to say to you it's going to continue going up and up and up and up and up, except that I think it's going to continue going up and up and up and up. But as we've seen here, and this is the warning I want to give you of what happens even with mighty Microsoft, we want to try and avoid that. And you might say, well, why do I want to avoid it, Alpesh? Look, came back up a year later. Yeah, but I'd rather have gone from here to exiting and then getting back in here than see it all the way down, then all the way up, and have missed capturing this gain. I've got some students who didn't pay attention, sort of buggered off and started running their businesses or whatever else. And they said, oh, I didn't get this massive gain. I said, how the hell not? And they said, oh, well, because I rode it all the way down. I said, well, why the hell did you do that? Didn't you hear what I said last February, which was get into cash? And I said, no, sorry, I was too busy doing other things. Well, that's your problem then. So that's the thing you've got to worry about, okay? Here we are with Amazon. Now, again, Apple strategy, because it's not fallen below its own moving average, but you can see the pain of doing that and holding on. So you might want to sell and ease back some of your position, even though all the analysts are positive, even though seasonality suggests it's not too bad. You might say, well, I'm a bit risk averse. I think I'll sell 10%, or I'll sell 20%, or I'll sell 30%, based on how much it's dropped from the high and based on your risk aversion. Now, if I had a crystal ball, I'd be able to tell you, no, don't do that, buy some more, or don't do that, double up or whatever. But I don't have a crystal ball, so all I can tell you to do is what I think is more likely to happen, and also what you should do based on your risk appetite, so you get a good night's sleep, because your sleep's really important to me. Now, Disney, as you can see, look at that, just near these levels where in the past it's doubled up, but I'm not looking to buy at the moment. So that's a simple answer to that one, isn't it? Even though the analysts are pretty happy, this is still holding firm. Now, it may well crack beneath that because it is overbought, in which case don't be caught snoozing. What you might say is, no, I'm in for the long term, I'll just hold, I don't care how much it drops. Well, in which case you're risk loving. And if you're more risk averse, you'll say, well, look, Alpesh, if it drops 10%, I'm going to sell 50% of it, and so on. Okay, so easy. That's called the NVIDIA strategy, and I've explained it elsewhere, including on my LinkedIn as well. Tesla's fallen off a cliff, and I said it was a special situation for us. We got in around January. It's done really well. I'm now out. Okay, just so you know. Why am I out? Well, it was a special situation. I didn't tick all my boxes originally to begin with, but it was one of the ones which I give my students as ones which are close enough. We've made our money, and now I'm looking to get it. And you might say, well, wait a minute, you're trading your investments. No, it was held for about 10 months, for goodness sake. And that's going sideways as well. So, and there's market headwinds. So I'd rather just ease off some of the positions that I've got and not be so exposed to equities. So that's where Meta is, and it's fallen off a bit of a cliff as well. That's definitely going to go low, and you can see what it's done in the past. It's when it's done that, it's done this, and it's almost an identical pattern here to that one. And so it might next week go up a bit, but do not be fooled. What we've really got to look at is this. And at the moment, it doesn't look like it's going to do that and fall off, because look, it's in the past done this. But you might just say, look, actually, Alpesh, I've seen what it's done in the past when it's done this, and I would rather not just hang around. I'm going to get entirely up to you. But I'm still on the Apple strategy with that one for now, because it's more of a longer term for me. Okay, ServiceNow is still Apple strategy. Okay, and I'm hoping it holds on to that. Still a solid company, just market headwinds. Cisco, we're out of. Look, it was did well for a bit, then fell back, didn't make anything out of it. So what? I'd rather just get out of some of these where I want to ease back some of my equity positions. And like I said, ideally I wouldn't be trading out of these investments, but it was a special situation, and I'd rather just not hang around and wait at the moment with too much equity exposure. So that's that one. But otherwise, some of you might say, no, Alpesh, I want to hold on because I've got it for my 12-month period, and if it doesn't drop 25% from the peak since I bought it, I'm not going to get out, and that's perfectly fine. It's perfectly fine. Netflix, I was showcasing this, not one that I own. I'm just showcasing this because it's in the news a fair bit. So I thought I would with those strong numbers, and that's where we are with it. And that's a special situation, high risk selection at the moment. It's where we are. So we'll keep an eye on it for you. And for those who are on the private channel and on my Great Investments program, and have a look on that, you'll have got a far more detailed broadcast on all of this, and more covering more stocks and what to do with your pension and so on. So some ideas on that. If you've not signed up, have a look at my campaignfor1million.com, and in particular, ping me about the Great Investments program. Thank you.